And that sound means we are now live here on our YouTube channel. It's our daily show. We call it a halftime report, where we go through the markets one step at a time, top down analysis style, looking at the indexes, commodities, key sectors that are moving that day, corporate information from a news perspective, chart perspective, anything really that's grabbing our attention that we think is relevant and important for your daily routine and market analysis, and break it all down for you guys and give you some insight from the coaches here at Tackle Trading. Welcome out to Wednesday's program. A couple things here as we get started. As always, number one, if you're a veteran of the community, coming on in, hashtag Team Tackle right in the chat. That's our official hashtag. Kind of gets everything started, lets us know that we are home and we're ready to rock and roll here today. If you're brand new to our channel, make sure you click subscribe, click the bell, come back and join us on a daily basis. We go live every day. The markets are live, 12:30 p.m. Eastern. Matt and Greg are here to join us today on a Wednesday. The old money master, the Trade Masters king, actually, for 1 week, will be defending his title tonight. Greg, Old Money Holmes, how you doing today, sir?
Doing very well. Thank you very much. It's a beautiful day out. It's nice to be here.
It is a beautiful day out here in Utah, at least. I hear down where I grew up, I was talking to my nephew this morning, Greg, and the winds were coming in at 40, 50 miles an hour. And I'm like, there's a reason I left that place. They're notorious for just high winds because they're right next to a canyon. Matt, you grew up there. You know exactly what I'm talking about. And I'm like, I don't get the same wind I did when I was a kid. So it's a beautiful day here in Salt Lake. Matt, how are you doing today?
Well, you're on the other side of the mountain, and that's a little bit different there in good old-fashioned Emory County, Utah. But I'm doing absolutely fantastic. Nice little hesitation Wednesday in the marketplace. A little overextended, not unexpected to see the market hesitate as those moving averages slowly creep up and catch up to the price action. So nothing really to see from a price action perspective in the S&P, just a little bit of a hesitation, Kendall.
Mm-hmm. Yeah, and I do want to get into all of the technical analysis, the news. There's a couple of things I want to talk about. Jeff Bezos was in the news. Jamie Dimon was in the news with some commentary. We'll address that. We also have some fun stuff
for Dimon's annual newsletter.
Yeah, I mean, listen,
he likes it.
Well, randomly, I have a question. I mean, is he in the top 10 of most important people who give commentary? I think Larry Fink, Warren Buffett, Bezos, Dimon, when he talks about the markets, people listen.
I would say so. He's up there. He's one of the major. He's probably the number one major New York banker that people listen to.
Yeah, he's definitely one of those.
His annual newsletter is definitely something that people should pay attention to.
Say a lot about Dimon, and we have, and we will. He is a pretty smart guy when it comes to markets. Well, I think he does understand those dynamics.
And I don't want to talk a lot about, what he said in his annual newsletter to his shareholders, but he did say that, the economic boom that everybody's talking about, that it absolutely has been in the economic data. Recently the IMF increased their projections of global GDP. I believe, what was the number they came in at?
6%.
Like 6%. Guys, that number, we haven't seen those types of numbers in 40, 50 years. Yeah. Like we haven't seen that in a long time. The central bank just increased their GDP projections from December to March. From 4.5 to 6.5%. Industrial manufacturing, housing data has just been unreal, quite frankly, just unreal how strong the U.S. economy is starting to pump right now. And obviously the projections of where we're going to be in the end of 2021 and 2022 and 2023, there's still road to travel there, right? We still got to go through that time frame, but the projections are quite amazing, and there's no doubt about that. And Dimon talked about how that the perception of that economic boom could last well into 2023, and that's when he really sees spending starting to contract. And the only thing I would say to Dimon is, why do you think spending is going to contract in 2023 when spending hasn't contracted at any point in the last year? And quite frankly, spending hasn't contracted at any point in the last 20 years. So I have questions why he thinks 2023, but we can discuss that at another time, maybe a podcast conversation. He also talked about it's hard to justify based on these economic projections, the amount of debt that we're going into right now and the amount of projected debt that we are going to go into. And I think I think that's perfectly reasonable for people to wonder out loud in conversation. Why are we going into all of this debt, and why are we stimulating this aggressively when the U.S. economy is expected to be as robust as it ever has been? Like that's hard. That's a hard pill to swallow. It's okay if economically 2 + 2 = 4, and you're projecting a 6.5% GDP in America. Why do you need to run the debt up as much as you are? You would think you wouldn't need to do that. So he talked about how it's hard to justify the spending and the amount of debt that we have undertaken as Americans when the economy is projected to boom as much as it is. And I'm certain the central bank would say today, yeah, those projections are just projections and we still need to get there. And even Robert Kaplan today, Dallas Fed president, Robert Kaplan said that even though he expects 6.5% growth, and even though he expects the labor market to contract to 4% unemployment, which if we achieve those numbers by the end of the year, nobody's crying over that. Nobody's upset over that. Nobody's concerning themselves over a massive recovery from a pandemic that, lasts 18 months. Nobody's crying over their spilled milk there. That's a really, really good thing. But Kaplan also said, but it's still too early to pull the stimulus from the marketplace. And that's their philosophy. So I agree with Jamie Dimon that it is hard to justify the amount of debt that we're projected to go into and the amount of debt that we have went into in the past year if our economy is really going to be as robust, if the housing sector is going to be as robust, as the market is going to achieve 52 all-time highs next year, or 75 all-time highs in the next 2 years. As we do that, it's hard to justify the amount of debt that we're going into. And so then he talked about, and he made a comment that I find really fascinating. He said it's not an unreasonable possibility that an increase in inflation will not just be temporary. And that to me was a very telling comment out of Jamie Dimon. There's this, the Fed is doing a really, I want to say masterful, but it's very easy to spot the transparency. They're trying to paint the picture that the inflationary impact based on their debt and based on all the economic projections is only going to be temporary. The concern that myself, people like Jamie Dimon have, is that this is not just a temporary situation from an inflationary perspective. And when you adjust the Fed mandate from a 2% to a net average of a 2% that we discussed all of last year, that is more of a longer term impact to where consumers can anticipate a higher threshold of inflation on an annual basis than we have historically went through. And so what the word choices that Jamie Dimon chose were very fascinating to me, because he said it's not unreasonable possibility. Those word choices are interesting given the fact that the Fed is trying their very best to paint the picture that the inflationary pressure is just going to be short-termed. And Dimon chooses the words, and it is not unreasonably possible. Think about those words for a second. Why not just come say unreasonable possibility?
It's not an unreasonable possibility.
He's basically saying, hey guys, come on. It's not unreasonable to think that inflation could be a concern longer term than you're anticipating. Right? He's saying that it's pretty obvious that this is going to occur. And I feel it's shockingly disgusting that you're trying to paint the picture that it's not reasonable to think that inflation could have a longer term impact. And so I felt like Jamie Dimon was quite frankly spot on in his analysis on the markets today, on inflation and debt. And Jamie Dimon certainly likes to put in other social commentary into his newsletters, unlike other individuals do, that maybe we can discuss at a later date. But for right now, regarding the boom, regarding the debt, and regarding the inflationary conversations that Dimon talked about today, I don't think he's being unreasonable. I think he's pretty spot on it.
Mm-hmm. Well, I'm glad you read through it and gave us a little breakdown here. That was fantastic because it was what was in the headlines number one here today. It was also one of the stories that we did talk about in the huddle today. Just a quick mention of that podcast. If you guys aren't subscribed yet, make sure you get that so you can get the top 5 stories each and every day. But Matt, that's the kind of day we are here today. Diamond's commentary, Bezos' commentary, that's what's grabbing the headlines. And those are important things to kind of digest because these are important people, obviously, but the markets aren't really moving here on that information.
They're not. Well, no, I mean, we're talking about commentary.
Yep.
We're talking about commentary on things we've all talked about. Like, what did Jamie Dimon say today in his newsletter that has not been thoroughly discussed by market participants?
Sure.
The debt implosion, inflation, GDP projections. I mean, these are all things that we talk about every single day as market participants. So he didn't say anything that was shocking. And the social commentary is fascinating commentary that can certainly be discussed. But no, it's not market moving information for Robert Kaplan today to say the obvious, and for Jamie Dimon today to state the obvious, and for other market participants to give their take on the obvious. So no, but it's a Doji Wednesday, and this is what we talk about on a Doji Wednesday.
Which, by the way, I love Doji Wednesdays. It might be my favorite type of trading day.
Doji Wednesday is my favorite day. No, well, no, it's not.
Doji Fridays are nice. Doji Fridays are nice.
After a week and a half where the market's up 7.5%, yeah, Doji Wednesday's okay.
Nothing wrong with it. Let's talk market conditions here real quick if we can. And Greg, anything you want to just throw in there before we start talking technicals? What are you seeing in the broad markets? How are you approaching it?
Yeah, well, I think you guys described it pretty well with Doji Wednesday. Really nothing going on. The only concern I have is the same one Matt has. The IWM, the Russell, it appears to have made a lower pivot high there. Which is, a little bit interesting as far as I'm concerned there. So we'll have to see where that plays out. It's still hanging above those moving averages right now, which is fine. But if we look at all the other indexes, they don't seem to look the same. Obviously, the S&P's up. Dow's looking pretty good. You've got the rest of the market looking pretty decent. And so, yeah, a little bit of consolidation right now. Tech's looking pretty solid. A little bit of consolidation is probably a good thing. When things tend to go straight up, they come down, just as fast. So if you can get them to kind of meander up, they usually stay up a little bit longer. So that's kind of how I'm seeing it right now. It's a big nothing burger today, as far as I'm concerned.
Well, and just to kind of add to that a little bit, Tim, when you're looking at the major market indexes, you're looking at the Dow Jones, you're looking at the NASDAQ, and you're looking at the S&P 500. The trends and the patterns might be slightly different, especially when you add the NASDAQ into that analysis. But the price performance over the last few days is really, really, really starkly similar. And so when you're looking at, say, NASDAQ, you break out of the 50-day moving average, you get that quick pop, and then you get the consolidation. When you're looking at the Dow Jones here, you break out of the high base, little hesitation, candles coming into the breakout channel, good pop, consolidation. When you're looking at the S&P, similar type analysis, is really kind of NASDAQ-ish, like very NASDAQ-ish, just different trend pattern coming into it. But when you're looking at the last 3, 4, 5 days of price action, you're getting a very similar read on the blue chip indexes. You get pop, 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 consolidation. NASDAQ, pop, 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 consolidation. Dow Jones, pop, 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 consolidation. Russell 2000. Nothing. And yet this is an only data point 19 and why this index is changing its behavior in comparison to the rest of the marketplace. So just another data point that tells you the Russell's over.
Yeah, definitely. It has had a change in behavior over the last several weeks to months, quite frankly. And Matt, you've been talking about it for quite some time. It was the number one index there from November until the beginning of March, mid-February, probably more likely. Now it's just rolled sideways, and that consolidation is notable, no question about it. What about the commodity market here today, Matt? I'm seeing a lot of kind of hesitation across the board in that regard, more interest in individual companies. There's still trades out there, like we always say. There's always trade on almost any day. But what are you seeing in commodities and currencies right now?
Well, dollar's forming a little bit of a bullish retracement, fighting for the support bounce. You're kissing off 24.8, which is an old resistance channel. You're right there in the 20-day moving average. And so you're in one of those deeper pullbacks in the dollar, and the dollar certainly could find a little bit of support. And a decreasing dollar this week has been a little bit positive for the gold analysis, no doubt about that. But the dollar's trend is not over. The dollar's trend is still bullish. It's just a little bit weaker today than it was, say, 2-3 days ago, when you're looking more as a flag, fighting against the 9, fighting against that 200-day moving average. Now you got a little bit of a deeper pullback. Dollar is showing a little bit of weakness against this current strength, right? But again, you're still looking at slightly bullish, and you're still looking at a bullish retracement here on the dollar. It's just a little weaker than what we were looking at just a couple days ago. Now, when you're talking about the dollar, it's going to have a little bit of a correlated status and an impact on other commodities. Quite frankly, the number one would be gold. And as the dollar is showing a little bit of weakness in bullish trend, gold is showing a little bit of strength in reversals of on bullish reversals. And again, this is an if, not a when, but if the dollar does violate its short-term trend, you could see that put a lot of pressure on this resistance breakout in gold. And whereas I would love to see 2 days of consolidation here. I would love to see 2 days of consolidation as the dollar fights against that support level, and as gold fights against this resistance level, and then gold breaks out. But you are in that scenario where the dollar certainly could fail its support level and gold could break out. Now, even if gold does break out, though, I don't think it's a push the chips to the middle of the table scenario. We're talking about a potential short-term reversal on a daily chart that would reverse this short-term trend. Well, that doesn't mean you're out of the woodworks. You still got to fight against some real powerful momentum, and that would be the 50-period moving average here, and then you also have horizontal resistance there. So what I'm looking at here on gold is obvious reversal here. You're looking at a pretty clean trigger right there at 1750. You certainly could dip toe in, right? That's a scale in type scenario, right? Dip toe in, third of position size, allow it to establish a resistance level at a higher high point, and then let's see that retest of that support level. We've been fooled on the breakout here on gold. We got fooled here. We got fooled here. We're going to get fooled on breakouts on gold. And you know what? We could get fooled here, and we could get fooled here, but we're going to look at it every single time. It's got a very standard W reversal characteristic. You're looking at it like we talked about last week, stick in the bottom here. You got to love that potential of that potential breakout. However, the trade that we've been looking at is actually on GDX and not gold, because GDX has been a little bit of an outperformer in this reversal, as it established a higher level of support right there around 32 versus gold coming down and reestablishing 31. Now you're looking at a scenario in GDX where you're not kissing up against a 50-day moving average. You're not kissing up against some type of historical resistance. You're really looking at this reversal being now above its moving averages, which is important to me. You got a very clean trigger right here if this reversal does take hold. Obviously, we love that 32 bounce. Now you're looking at secondary triggers. So let's see how GDX will perform in a high base scenario as you fight against this resistance level, or as it forms that next higher low as you come against that reversal. But the reversal would couple a breakout of 34.5 on GDX, and it would, coming back to the gold charts, that confirmation would be above 1750 on gold itself. And then oil today, Tim, obviously we had a little bit of inventory news here today. All the headlines are, what are all the headlines? Oil struggling under $60. And I'm like, oil's been under 60 like consistently for the last week and a half. What are we doing, people?
Yeah.
Pick a different profession. But it is fighting for support. It is absolutely fighting for support. 57.5 to 58 is going to play a role here as a support level. If that holds, that is certainly going to help this stabilization argument. EIA numbers are all over the board last couple weeks. They should continue to be all over the board the next few weeks. So I do expect some volatility here, but for me, oil stabilization is the most important form of analysis here because we're all in energy. And so having this hold certainly helps that argument. If it doesn't hold, certainly expect to see some volatility in those energy charts. The beautiful thing about stabilization, though, is remember the zone of support we talked about. It's a pretty big zone. And as long as we stabilize and not just puke everything up, we should be perfectly fine for that energy play that is still trying to fight underneath the 20-day moving average.
Mm-hmm. Greg, anything you want to add to gold and oil here? I know the commodities are a big part of your approach to investing in the market, being the old money type of mindset that you are. You like the hard assets, that actually have value like that. Anything you want to add to the gold analysis?
Yeah, no, I think Matt's always spot on, but I have to agree with pretty much everything he says. I've been watching the gold and I've been waiting for this reversal for a while. We're working on it, but I like Matt's comment where you're not pushing all the chips in the middle. But I think now, you start to see this W pattern here. You start to see it working its way higher. Obviously, GDX and some of the other individual gold stocks look a little bit better than the futures chart here. Starting to work that way, you're starting to get a little bit more interest, I guess, in it. And so once you get those reversals and you get that interest, you start working on it. I think you can start to build out some trade ideas for that. So really happy to see what gold's doing. It's made the higher low already. Back a week or so ago, we're seeing if it can make that higher, the next higher low, as Matt said. I think that's very important. You want to make sure it stabilizes, at some point above that previous pivot right there. Yeah. If it can do that, then I think you get that next leg up, and that's really what we're after. The 50 MA is going to play some support there as well. So I just think there's opportunities there, and especially with the markets, we kind of went through all the indexes and they're all bullish, but they're all pretty high as well. Right. So yeah. You can see that some things are a little bit overpriced, in certain circles. I think you find gold, not so much. Right. So maybe this is an area where you can find a trade or two.
It's fascinating, Greg, and I kind of chuckle at the comment, but I've listened to Jay Powell in the last 2 weeks talking about, there's some rampant speculation in certain areas of the market, but they never define those areas of the market, right? And Jamie Dimon literally talked about that in his newsletter today. There's some rampant speculation in certain areas of the market, but they stop short in saying what areas of the market. I can promise you they're not looking at gold.
No, it's not gold.
No,
I just want to clarify that. They're not looking at this instrument. In fact, this is where we start. This is where we start assessing value.
Yeah.
And that was kind of my point, right? Like, me being old money homes, right? I'm looking at all those blue chip stocks, things like that. Even actually the reopening plays. If we look at a lot of the reopening plays right now, a lot of them are higher than they were back before the fall in 2020 there. So, you could look at that. And again, markets can go further and faster than we could possibly imagine. But, you start looking at that stuff and, those numbers that you talked about, that 6% GDP and all these numbers, all these projection numbers that we're looking at here, that's great to have those thoughts in mind. And maybe that's what they're trying to let us know. But the reality is when you get things that are overcooked, value investors like myself, old money homes here, I'm looking for some deals, and I'll be honest with you, it's getting tougher to find those deals, right? So now there's always opportunities, earnings, whatever, but you look at the gold sector and you go, Yeah, you know what? It's kind of been beat up a little bit. Maybe it's going to give me an opportunity. And again, I just say maybe it's going to give me an opportunity. I'm not saying you rush right into it, obviously, but it gives you something to look at, right? It gives you an opportunity to say, hey, maybe this can work out to my favor at some point in time. So that's kind of how I'm looking at it.
We need to define reopening better as market participants, and I'm dead serious there, because when you say the word reopening, you as market participants, we assess that as recovered. We just do. Mm-hmm. And I saw some Wall Street firm today put Dell Computers as their best reopening play. I just, again,
hold on. It wasn't just some Wall Street firm. Was it Deutsche Bank?
It was Deutsche. But I wasn't going to give them the due diligence they did not deserve. Deutsche Bank said Dell was the best reopening play. And I'm sitting there going, that's an all-time high. Let me go from this angle. Hold on. Let me try this angle over here. Yep. That's up 25% this year. Oh, wait. Oh yeah, you're up a good 70% from the all-time. Okay. Good job, Deutsche.
Yeah, so it's that kind of thing, right? Like I said,
yeah, it's just like when you're 70% above your recovered price, you got to call it something else. That's all I'm saying.
That's exactly
call
right.
it something else.
Well, and they've already been hitting.
Call it your best growth play for 2021.
Sure.
Call something else.
Whatever. Yeah, exactly. Call it an infrastructure play if you want to, I guess.
He also called it the best infrastructure play, and I'm thinking, okay. All right.
Must be that personal infrastructure that they're talking about.
They must
that Mr. Biden's talking about.
They must have ripped off personal gold from 5 years ago.
I think McDonald's is the best lunchtime play in the market today. So
I think we should all start wearing more jeans.
Sure, why not? And Crocs, jeans, Crocs. We'll call Crocs reopening play too. People got to wear those shoes. It's pretty silly. Deutsche Bank, obviously, Dell is not a
Are we just going to call the stock market reopening? Like, just called the entire market reopening play?
Dude, you know how these catchphrases get caught on and all the analysts start saying the same thing over and over again. It's just lazy analysis is what it is.
So lazy, though.
It just is. It is.
So lazy.
Quick peek at Bitcoin, then we're going to get into some stock talk. I also have some upgrade downgrades I want to work through. And then I want to take a look at what Greg has for us here today. And by the way, if you're out there watching, Coach Greg has brought a stock or two, and he's going to actually look at some option strategies with it. We're going to do a little bit of an options comparison, which strategy we like better here in a few minutes. I know options are a big part of the way you trade, Greg, right?
Yep. 100%.
Yep. Coinbase is going to IPO next week. They released some data in front of it. As we talk Bitcoin, I do want to bring up Coinbase, the biggest digital holder of coins for consumers out there in the world. They said they have 56 million verified users, number one. Their revenues in the first quarter of this year exceeded all of 2020, which was a robust year as well. The company's obviously on the up and up as Bitcoin is at $57,000 a coin. It had an explosion into the crypto markets, which have now eclipsed $2 trillion in market cap. When you total everything all together, Bitcoin's about half of that at 1 trillion. Matt, technical read on Bitcoin here, because obviously we're hesitating up here at the top.
Well, technical read on Bitcoin, very simple here. Nothing really has changed from the weekly chart perspective. It's still lined up on the breakout. What has changed, though, is the intraday analysis, given the fact that today did break some fairly important intraday. Yes, we are just talking intraday. But if you remember, we talked about this intraday chart lining up over here. We were looking at this last week, and I said, you know what? As long as this pivot over here does not fail in that 57 and a half ballpark, as long as that holds, your analysis of this is going to maintain in terms of that breakout of 60K. That's over, though, now. At this point now, you have a short-term downtrend from an intraday perspective, which has not only violated an intraday support, you're now looking at lower lows, lower highs from an intraday perspective, which obviously means nobody's looking at this trend over here any longer. And so now we need to reassess that intraday, wait for a double bottom, kind of like gold on the daily chart now, right? You have that short-term downtrend coming down, you wait for that W, you wait for that breakout. Now we're in that type of analysis here instead of we don't care if it consolidates, we don't care how long it consolidates, as long as it maintains the consolidation. Well, we're out of that. Today ended that. You're now looking at a short-term downtrend in intraday analysis. You just got to disclaim that sometimes. Intraday analysis, which means we're just looking for some stabilization on that intraday chart. And then as that stabilizes, these daily charts will be fine. Still, you're still looking at the breakout. It's just you're not looking at that aggressive trigger above 60 any longer.
It's still bull on bull crime. It's the best way I've heard Bitcoin described.
It's all bull on bull crime.
Yes, it
and
is.
I was first one to describe. I want credit on that one.
It's one of my favorite ways to describe cryptocurrencies I've ever heard, Matt. And you are the one that deserves credit on that. Bull on bull crime, because these aren't bears coming in shorting Bitcoin. Who in the right mind would short this juggernaut? Even if you want to bet against something, Greg, it's probably not against the crypto markets right now.
So as you were saying that, I hadn't heard that saying until right now. And as you were saying, I didn't think you were going to go bull on bull crime. I thought you were going to go bull on bull crap. But I had to wait for you to finish your sentence there. So carry on.
I did not say bull on bull bullshit. I didn't say that. I said bull on bull crime. But no, listen, not even dumb Wall Street hedge funds would short this.
No.
So no, there's no shorts. Well, maybe dumb Wall Street hedge funds would short this.
I would like to find them. And
they're still shorting GameStop. They're out there.
Some of them are still out there.
Like usually, like the pros would make fun of retail. No, pros just make fun of stupid hedge funds now.
Yeah, correct. Not a lot of
leveraged dumb hedge funds.
Agree. Let's run through stock talk real quick here. There's a couple of corporate items. Then there's a few upgrade downgrades I do want to talk about. And then we're getting into Greg's segment here in just a minute. General Motors announced, and they released some pictures, some really interesting stuff around an electric vehicle called the Chevy Silverado. They're going to be building their truck as an EV. Greg, I know you are a truck kind of guy.
I'm sure that makes his heart all warm and fuzzy.
Oh, he's shaking his head. He's like, the things Greg actually wants to say right now, I would love to hear.
Greg's going to go get in his truck, get his gun, and he's going to the hills today is what he's doing.
Just shoot some bottles.
He's going to go shoot some bottles.
I'm going to go drive my truck, and I'm going to go drive it 500 miles, and I'm not going to need to recharge it 4 times before I get there. So anyway, carry on.
Greg, I have a feeling you have a lot to say about this.
Are you going to drive that?
The funny thing is before I met you fine fellas, and before I became a trader, I was an electrician. So I understand very well what electric grids are and charging stations and how power is created. And unfortunately, we're not getting the full story from our friends here at GM. So anyway, I don't want to rain on the EV.
Are you saying GM's leaving stuff out?
Well, weren't they tied to what was that, Neo or whatever it was, the one with the cardboard cutout of an actual EV?
That was
no, it's even worse.
That's worse. Yeah, that was the Nikola.
Nikola. That's what it was? I forget what the symbol was.
They also invested $2 billion in that picture from the Nikola Badger. So maybe they're like, all we need is the meme of a Chevy Silverado, and we're good. We don't even need to create the real truck. Just create an NFT over a EV truck. We're good.
Yeah. We will
fool everybody in the world to think we're an EV company simply because we got a meme of an EV truck. That's all you need anymore.
So, Greg, you're not buying a Silverado EV? Is that what I'm hearing from you?
First of all, I'm never buying a GM. That's a whole nother conversation. But
I'm buying Greg.
I'm not buying an EV truck. Thank you. Everybody else can buy them. I'm okay with that. Like I said, I have a very good understanding of how electricity works, and I think we're missing a few pieces of the puzzle to that. So
school.
Listen, since Greg truly understands how electricity works, I'm going to buy Greg a meme of a Chevy Silverado using Bitcoin. I'm going to make his Wednesday.
So all I want to know is between here and the Detroit airport, where there's 4 actual charging stations, how many Bitcoins does it cost to recharge your Tesla? That's all I want to know.
In my scenario, you're never going to drive the truck, but you can think about it.
I can, yeah. I can visualize. I can put up my vision board.
That's right, buddy.
So,
if you don't stop being Greg, we're going to sound 95 years old real fast. We got to put a stop loss on this.
Next, Kraft Heinz next. I'm going to make myself
me and Greg just literally aged 45 years together. It was fantastic.
I'm going to make myself sound pretty old here next. Bring up Kraft Heinz. I don't know if you guys know this. There's a ketchup shortage in the country. Many diners and restaurants, not KFC. You're thinking chicken, fried chicken.
You just got me hungry there, buddy.
That's right. KHC. Yeah. And frankly, it's a real thing. They cannot find a product. They can't get it in stock.
Ketchup?
A lot of it is because of the delivery systems from COVID restrictions, stuff like that, because you can't share stuff within the diners. So they need to find different new creative ways to start delivering ketchup. And they don't have it yet. Kraft Heinz is suggesting some like touchless type technology where you can get your ketchup out there. But Greg, have you been out to eat recently? And have you seen the ketchup shortage? You still getting your little condiment?
No. So here's the issue for Ontario, Canada, where I live. We went into a lockdown again last week, which we never really opened up from. And then we just at 2:00 today, which is about 50 minutes from now, are going to get a stay-at-home order for the next God knows how long. So nobody's going out to eat, to be honest with you here. So ketchup shortage. I'm feeling like this ketchup shortage is very similar to the toilet paper shortage of the great toilet paper shortage of 2020. I don't know.
I still have supply from that shortage.
Well, there you go. Me too. So maybe I've got some ketchup downstairs in the cold cellar. I'm not sure.
Well, in other news, Tom Brady created an NFT company to solve the ketchup supply crisis of 2021.
Nice.
Yeah, one of the reasons go ahead, Greg. I got to tell you.
We had this big thing last year in Canada. I don't know if it affected the U.S. or not, but there was a big kind of battle between Heinz ketchup and French's, and French's kind of took the lead, at least in this area here. So I'd be curious to see if they're having the same crunch.
Honestly, I am very new to the ketchup war of 2021.
Me too.
I'm very new to it.
It's real.
I did not know we were having a ketchup war of 2021. I did not know this.
Hey, we could all go English and we could trade our ketchup for mayonnaise.
It's not the first
big a problem.
Or you can just go Yukon and combine them and call it good.
I got to tell you guys, one of the reasons I like this story is because you know how I like tidbits in history, and it's a light news day here on a Wednesday. There's been another time in history we had a very, very real ketchup shortage. It was the 1930s during the Great Depression, especially in the Midwest, as the Dust Bowls happened. And you guys, Greg, you're a Chicago Bears fan. You've been to Chicago many times. Matt, you traveled. You know a Chicago dog, right? Has no ketchup on it. It has a slice of pickle and it has a slice of tomato. That became popular because they started just serving tomatoes on the dogs instead of ketchup because they didn't have ketchup. So it was a way for them to kind of do that. Am I making you hungry again yet, Matt? Fried chicken or a Chicago dog? You got to pick one.
You start talking hot dogs and I was out.
You're not you don't like Chicago dogs?
I'm not eight.
I don't eat hot dogs either. You and me, Matt, we're like.
Are you going to cut them up and have me dip in my ketchup? Like,
Matt, dude, we're not talking about mac and cheese and hot dogs.
I know, but it was an easy joke.
I get it. No, first of all, I like mac and cheese and hot dogs. I might have that for lunch myself.
Listen, you acted like it was a slow news day. My Tom Brady news was legit, bro. That was on CNBC.
That was a real thing.
I literally thought
this is the world.
No. Tom Brady creates an NFT company is absolutely a real thing.
Are you serious? I did not see this.
100%. Now, to fix the ketchup shortage of 2021 was maybe a little onion. But
the Tom Brady story is an onion story.
We all gotta realize that some of this financial market news is onion-esque.
It's crazy.
Days. Yeah, these NFTs are insane.
That's nuts. By the way, another food-related story, Chipotle Mexican Grill. And you want to talk about hashtag no inflation, Matt? I'll give you a no inflation story here. They got an upgrade from Truist for one reason, citing rising commodity prices, rising beef prices. They're going to have to sell their burritos for more money. We're upgrading the stock.
No, they're not. What they will first do is contract how much they put in the burrito.
Yeah, that's what a lot of companies end up doing. Yeah.
That's the first thing they do. So.
Yeah. I saw that story and I thought hashtag no inflation. Yeah, right. Obviously that is still happening. And then
Tim, but amazingly, it's not unreasonable possibility that inflation might be a little longer term lasting.
Yeah, it's not going to just be for a couple months.
Why can't we just say inflation's here?
Inflation is here.
Why can't we just say that?
I'll tell you where it is, boys. It's here, and I've seen it in real commodities here. So a 2x4 here in Ontario, Canada, last year was about $4 a 2x4, shortly above that price. It's now over $11 for that same 2x4.
I know.
So if there's no inflation, I'm just confused as to how did that happen.
Can I ask a simple question though, because it seems like there is a very direct campaign happening against people who say inflation is real, and it seemed like Jamie Dimon was picking his words extremely carefully when it came to the inflationary conversation. What is wrong with simply saying inflation is a concern?
It's a reasonable approach. Nothing. It's a reasonable thing to say because it is a concern.
Have we seen lumber prices, rebar prices, housing prices, food prices? Have we seen what's happening with the energy prices? Yeah. Inflation. Let's just be real, Wall Street, for a second. Just be a real person for one damn second. Inflation's here. It's real, and it is absolutely a concern.
Who are they trying to convince? The non-inflation, the no inflation people? Who are they trying to convince?
They're
like
trying
to. I was just talking to a buddy of mine yesterday who wanted to build a new home. He asked about a price last year, and this year's price is $100,000 more than it was last year to build the exact same home. So, like, I'm not sure who they're trying to convince. You know,
it's very simple. They're not trying to convince anybody other than the New York Fed that Jamie Dimon and J.P. Morgan wants their percentage of the $120 billion in quantitative easing that comes into the market on a monthly basis, and they don't want to rock the boat and piss off the Fed, who is very, very, very obviously painting this no inflation type scenario so they can justify their outlandish and quite frankly terrible monetary policy that is threatening the economic impact of countless people.
Fair enough. That's kind of what I was asking. That's what I was asking, because
I'm sick of people not being direct.
Regular people, that's for sure.
Just speak your mind.
Lumber prices alone is a part of that home price thing you're talking about, guys. And Greg, you mentioned 100,000 on it. Lumber prices alone, I read a study last month we talked about in the halftime show, have added $25,000 to the average price of an average home, not a top end home, not anything like that.
Oh, it's
That's
average.
Just the lumber in it. That's just the lumber itself. Yeah.
But you add drywall into there. Like, it's not just
everything.
It's the lumber. It's lumber. Everything else just keeps adding to it. Yeah. It's a real problem.
And again, this isn't based on massive demand, guys. It's not what this is based on. This is based on inflation. There's a difference, and one is good economically, and the other one is god awful economically. Yeah. And I guess it's up to the eye of the beholder to pick which one you believe in.
I agree.
100%.
I agree. Couple of upgrades, downgrades. We'll go through them pretty quick. There's not too many that grab my attention. Sunrun, if we can here, Matt. Obviously solar is something that I'm personally interested in this year quite a bit. You've talked about it. I think it's RUN on this one, if I remember right. Let me guess the old symbol. It's such a juggernaut there for a while, especially, through July, August, September. Then after the election, it caught a big upbid. The whole solar industry did. It came back down to earth here recently. They were named as an outperform by RBC Capital in the solar industry. And those outperforms are always the tricky ones, right? When it comes to this, they just like the positioning for Sunrun. They like obviously the overall industry with what's happening with Biden's infrastructure proposal and things moving forward. And they like this company. Matt, do you agree with Run as an outperform?
Give me a second on this one.
I knew you're kind of going to look at them a little bit. So,
well, I don't think they're as tricky as others. I actually think when you're comparing a sector to its industry, it's actually easier than when you're comparing the sector to the market, a stock to the market itself, right? Because you're comparing like counterparts. You can compare the fundamentals fairly easily. You can compare the technicals from a fairly easy perspective. And the simple reality is most of these solar energy companies are doing fairly similar to what Sunrun is doing. And so if you look at some of the historical darlings out there, First Solar, short-term downtrend fighting against the 200-day moving average. When you're looking at Sunrun, short-term downtrend fighting against the 200-day moving average. When you're looking at ENPH, short-term, let me do that again, ENPH, short-term downtrend, fighting for support. Little outperformer there on that one. But you're really seeing a marketplace that is, and again, let me get the proper symbol there. You're seeing a marketplace that is performing fairly similar to one another. And quite frankly, I anticipate, especially when you're talking about an infrastructure plan that's going to impact an entire industry, I see this industry performing fairly similar to one another in the future. And so it's going to be hard for me to suggest that Sunrun is going to be that darling when the data suggests it's just doing the same thing that the industry is doing itself. And so I would not have Sunrun as an outperformer. I would have it in line right now.
I think so as well. I mean, I looked through some of the charts this morning, and I'm interested in solar. Don't get me wrong. There's lots. Canadian Solar I love from our list, and there's many stocks that I'm very interested in long term. But they've all kind of come back down here into these patterns, and they've got a little work to do in the short term before you get clarity on them.
Yeah, they do. They all have some time, but I mean, Canadian Solar here, you gotta like the 50-day moving average. You gotta like that coordinating against that $50 price threshold, which is a significant number. You also gotta like the fact that you have a double top there at $50 as well. So it's a very easy trigger to say, you know, if we do expect solar to run, and I do expect solar to have its day in the sun here. I mean, we are talking about a Democratic president who just put a $2.1 trillion infrastructure plan in place. And quite frankly, we all know how much, we all know the Democratic wish list from an energy perspective. We don't need to discuss that right here. So we know it's going to be part of the plan. We know it's going to be a big part of the plan. We just don't know exactly to what detail it is and where it fits in the trajectory of the things we're going to be building over the next 4 to 8 years. So there's things we don't know, but we do know this is part of that plan. And it's really hard for me to see solar not performing well in that environment. Okay. But for me, it's just a matter of which ones start separating themselves after they take off. And if you're looking at just take Sun not Sun, that's actually a really, really good breakout there. But if you take Sunrun here, you're looking at a stock that's really battling against its 200-day moving average, really, really battling. When you take one of our favorites from years gone by, First Solar, really battling against that 200-day moving average. I take a look at our friends to the north, Canadian Solar here, and I see something that's not a battle at the 200. I see something that is outperforming its industry, outperforming its counterparts, and setting up a really good trigger above 50. So no, I would have Sunrun in line with industry expectations, and I would have CSIQ as an outperformer.
I love the analysis there. Let's go next here. Viacom. This is a bold call here, and I'm interested to get you guys' perspective on this.
It's bold, but it's the accurate one. I know what you're going to say. Give the news.
Yeah, for sure. You know, the thing about it is Viacom got swept up in the Archegos capital management implosion from a few weeks ago. There was actually some interesting stuff out of JP Morgan, Morgan Stanley that we saw they were dumping shares. We knew that they all have their little tricks. They were dumping them to other hedge funds. Information.
Okay, Tim, when you have to dump something, you got to go to the computer, right? You don't get to just call and say, I'm going to offer you my stock at a discount, and I'm not going to tell you that everybody else is offering the stock at a discount. We're not going to tell you exactly why we're offering the stock at a discount. We're also not going to tell you that we're going to dump all the shares to the open market. Dude, this was out of billions. This was a storyline out of billions with Morgan Stanley. It was fascinating.
It was a Wall Street type of movie type storyline. Absolutely. Morgan Stanley dumping their shares to other hedge funds without disclosing the full information. That's the game on Wall Street. No, we don't get to operate with.
We don't get to play that game.
No. But Viacom was swept up in that. And now they're actually getting an outperform rating at Wolf Research, the firm basically saying now the valuation is attractive. It was way out of line up there at the 9,100 mark, but now we've come all the way down to 40, and we still like the fundamentals of the company. They believe the recent volatility is bringing it back to levels that they're now interested in it. They're calling it outperform in communications. Matt, I'm sure you've got opinions on this.
I do.
Let's have you go first here. Actually,
it's the right call, and it's a hard call, but it's the right call to make, in my opinion. Viacom is not Viacom is not the same storyline that took hold in GameStop, AMC, and some of these other things we've seen take off in the last year. Viacom is before all of this, Viacom was a $20 billion company that was slotted to be the fifth in position on the streaming wars. Viacom is a fundamental juggernaut with the PE ratio coming into the year right around 13, had a great valuation coming into the year. Viacom was one of the Tackle 25 stocks. Viacom is still a Tackle 25 stock, despite the fact that Viacom has been cut in half in the last 3 weeks. I'm not removing the Viacom from the Tackle 25. Are you kidding me? Like, are we joking there? Is this a fundamental like silly joke? Viacom has an 11 PE ratio right now. This very second. It has an 11 P ratio against other stocks in the sector. Comcast 24, Netflix 92, Charter 40, like the entire sector. Disca 24. You know, the only ones that don't are Dish and Viacom. The only ones with proper valuation are Dish Network and Viacom. That's it. Outside of that, we're talking about an overvalued juggernaut. So fundamentally, if you liked Viacom coming into the year, and I'm talking fundamentally, I'm not talking technically, because technically you're shockingly, guys, Viacom is still up like 20% on the year. It's still up like 20% on the year. So Viacom fundamentally, to me, is actually in a stronger position right now than when it was when I decided to put it on the Tackle 25. It's got better valuation today after the sell-off than it did. And yeah, you shook out the nonsense. You shook out people chasing. You shook out these hedge funds that were just diming every time we hit that 9 EMA. Did we really think this was real? Like, anybody? Did anybody think this was real? This was real. Like, this was actually real things that were happening. Like, Viacom all of a sudden went from a $20 billion company to a $120 billion company in 3 months. And that was based on fundamentals. This was all momentum hedge funds. That's all that was. That's all this was. Just momentum. It gave it back. Viacom is a story, no doubt. And it will something, and much like GameStop, chase the euphoria when it happens. But this is what can happen when those support levels fell. Mm-hmm. But to me, I think you got to give credit where credit's due. And I think it takes courage in the face of that volatility to say this is nothing. And I think it takes courage at whoever said that, at whatever Wall Street firm they said that at, to, even if it's Deutsche Bank, I'll give credit where credit's due. I don't know where this analysis came from, but I'm telling you right now, Viacom is a better is a fundamental company with proper valuation. And even though we're still in the storyline of that hedge fund, I see this as a buying opportunity in Viacom, quite frankly.
Mm-hmm. Yeah, the company.
Now, I don't see it as a trading opportunity.
No,
I do not see it as a trading opportunity. You don't trade in the face of this. You're not the dude or the gal that's going to buy the tick. That's not who you want to be in life. You don't want to be the guy or the gal that's going to nail that tick there, because all that means is you're going to go bankrupt many, many times in your life. You're going to want to see that stabilize first. This is not a trading opportunity. This is a value opportunity. If you're assessing Viacom as valuation, you got to have it as a buy right here. I'm not certain over the next 5 to 10 years, you're going to have many opportunities from a fundamental perspective in a company that's part of the streaming wars at a valuation at 11. I'm not sure you're going to get that many opportunities. You'll get a lot of opportunities technically. I'm not sure you're going to get this many opportunities from a fundamental perspective. And yet, 40 could fail and Viacom could find 30. There is no doubt about that. No doubt about that. All I'm suggesting is fundamentally there is a difference between what is happening with GameStop, what is happening with AMC, and what has and is transpiring with Viacom.
Mm-hmm. You got to give it's Wolf Research is who the firm is. I've seen the ratings a few times. I got to give them credit though. Bold call, and I agree with the call. I love the analysis.
Listen, we make fun of people that chase rankings. We do it all the time. Here. They did not do that, and you got to give credit to it.
Yeah, yeah. AMC got a downgrade, but we all know AMC should be downgraded.
Oh, yeah. See, now we can talk about fundamental garbage. There you go.
So, Greg,
the entire industry is failing. The entire industry has negative valuation, but yeah, AMC to the moon. Okay.
Yeah, Greg, you tell me if you agree with this statement from an analyst at Loop. He said, AMC's competitive position has not improved. Its enterprise value has almost doubled, while its closest competitor's value has declined.
I agree with that then. I agree with this analyst.
Yeah, he's like, nope.
I agree with that.
This is crazy train. Now there's no reason why AMC should have doubled, triple, quadrupled in the last 4 months. So,
go ahead,
Greg.
Yeah, so going back to Viacom for a quick second there, I just kind of looked at their fundamentals very quickly there. They've had an increasing asset base for the last 4 years. Their income's, trickling pretty good up from an upward standpoint there. They're fundamentally sound. I think they've got a good business model. They got a good brand, that kind of thing. Then I come to AMC and I look at this and I'm just like, are you kidding me? I
want to throw up.
Like, yeah, are you kidding me is the only thing I could say to it. And I haven't even looked at the fundamentals deep, but I don't really need to either. I know that, movie theaters where I live haven't even reopened yet from where I live anyway. So
they had bad fundamentals before.
Yeah,
AMC was garbage before pandemic is garbage after pandemic. That's AMC.
Yep, that's right. Let's not delay it anymore, Greg. I know that you've brought a couple of different ideas here for the show today, and you got a stock idea, and then you were going to show us a couple of different ways you were thinking about playing it with the options. We don't have a name for this segment yet, Matt, but we thought it'd be fun for the coaches to kind of geek out on their option strategies. We know how veteran traders love to dig into their risk graphs and build spreads, whether they're debit or credit or horizontal spreads. Whatever it may be. So
well, let's ask the community. How many people are with us right now? I'm not
a couple 120 or so.
120?
Yeah.
Okay, so of the live listeners here, guys, on a scale of 1 to 10, 1 being you are very, very new to the world of options, right? Not stock, not equity, not commodities, just the world of options. And 10 being you're the wizard and you're the one that should be on this channel, pitching Tim and me option strategies. On a scale of 1 to 10, where do you feel you fit within that range? Because typically in our halftime report, Tim, I'll be honest with everybody. It's me, the one holding these traders back from geeking out a little bit on their option techniques, because I think it goes over the head of a lot of our newer listeners, newer viewership. But I did want to give the coaches at Tackle Train an opportunity to geek out a little bit on their option techniques. And so we're going to treat Wednesdays as the ability of options Wednesdays. However we want to name this.
Right? How about options wizards?
How about you
Wednesdays?
And I not name it because we're terrible at it? And,
you're a wizard, Harry.
And the community is, see, that's why you shouldn't talk right now. You're a wizard. That's what we do. No, that's not good for anybody. Okay, but the community is far more creative than we are. So community, we're looking for the name of a segment for the coaches to geek out on their spreads.
So on a scale of 1 to 10,
fair calls, that type of stuff.
Well, and we would love ideas to name it here, guys. You guys are always very helpful with that.
Naming names.
Naming this segment. But a couple of things here. Number one, the question on a scale of 1 to 10, a bunch of hashtag Team Tackle popped in here. Matthew says I'm a 2, but it's the next thing to learn and excited for it. Linda 4,
Love
Patricia
options.
7, Jacob 4, Glika 7, 3 at best, 8, 8, 2, 4, 7, 3, 4, all over the board. I don't see any 10s in there, by the way. So
well, anybody that says they're a 10, I wouldn't say I'm a 10. I wouldn't say I'm a 10. So no, when you say you're 10, you might as well just end it. Like your life's over. You're not improving. That's peak you. Like peak. No, you're not a 10. Okay. You got work to do. Come on. What are we doing? So okay. So we got some middle of the ground. We got some 3s and the 4s, and that's about what I would expect. Okay. So Greg.
Yeah. So
wow us.
I got first of all, I want to wow you with the name. Hey, look what I found in the couch cushions. A trade, so something like that. I don't know.
Is that Canadian humor that I don't understand?
That is Canadian humor. That's
old dad jokes,
I guess.
Greg,
it's rated PG. What can I say?
That was the Canadian dad joke.
Okay. Major League Baseball just started, Greg. You get 3 strikes before you're out.
That was strike one.
Okay,
that was a swing.
That was strike one.
All right, I got 2 more.
I was trying to be nice, Tim.
I'll be like Babe Ruth. I'm not even going to swing the second time. Just the third time.
Babe Ruth only needed the third time.
All right, Greg, you're up.
All right, so let's look at Best Buy. BBY, please.
What time frame do you want on?
Daily's good.
Daily's
Start
good.
With daily. Daily's fine.
Daily's good.
Greg, I brought the stock up yesterday for the Queen's Court, and I got my head lopped off. I might have needed your help on this one. So,
yeah. He definitely didn't need my help because I'm the one who caused his head to get chopped off.
The king is here, so
there you go.
We're using this one anyway. So just pattern-wise, trend-wise, if we look at maybe the 3-year weekly, Matt.
Yeah.
So you can see that we've had a nice run. It's up there consolidating. We're looking for a breakout of that consolidation. We're on the weekly chart there. We've got a inverted head and shoulders, even a more recent cup and handle there. I really just like the setup, again, both from a weekly perspective. And then if we go back to the daily chart, it looks very nice as well. So for me, this is just a breakout opportunity. We're right around that 120 mark. We're actually at $120.13 today. Looking for a breakout, just probably, I think it's around the 121, if I remember correctly. I'm looking for that breakout. It's been strong for a while. It's consolidated. It's had some movement. It is a mover, which I like. That's the other part I do like about it. And the other part, we've got some time between now and earnings, which is fine. The reality is it's just your simple breakout pattern type trade. And so now what I can do is when I see a trend or a pattern I like or both, then I can go in and I can start to think of this. How can I get this creative from an options perspective, right? And so the two ideas that I typically look at, or not typically look at, but the 2 ideas that I think about are, do I want to do a directional trade or do I want to cash flow this? Okay. And fortunately for Best Buy, it actually works out well in both ways. So what I want to do is I want to build a credit spread and I want to build a debit spread, and it can be played either one of those 2 ways. But this is the kind of the way that I like to break these things down. The spreads are not that complicated. If you're ever lower on that scale that you guys had, it might take a little bit of a little bit of practice, a little bit of learning to get through that. If you're a little bit higher on the scale, this is probably going to seem very simple. But in my trading experience, simple tends to work really, really well. So the first thing I want to talk about is below these 2 moving averages here. I believe you got the 20 and the 50 there. So if you look at that $110 level there, we've got a couple of levels of support there before we get to that 110. So where I'm going to start with this is I want to go into the trade tab. If my buddy Matt's still here, I didn't lose him.
Oh, it's all right. By the way, I'm looking at the chat here, and Jonathan reminded me that I got lobbed yesterday on this stock because of I talked too much about it, Greg. And Emily did not like that. She wanted to get right down to the point. I'm liking the technical analysis here, obviously, in those long-term. That's one of the things I did like about is the long-term 3-year range that you were in, Greg, that we could potentially break out of those multi-tops that we were seeing. But then, so on the weekly chart, you got kind of clear resistance that you can clear through. And on that daily chart, you do have that higher pivot, low that we're developing, which is kind of that little cup and handle type of situation. But anyway, you're thinking debit spread and credit spread, and you're starting with the credit spread. Is that right?
Starting with the credit spread. So like I said, I've got some support there of the 2 moving averages. You've got some support above the 110 there. So I like the 110 level. It gives us enough kind of cushion there where I think we can make a decent trade here. So I looked at the weeklies. The weeklies didn't impress me that much. There was the bid-ask spread was a little bit wide for me. So looking at the, when you start to get out to those other, get out to the further out of the money strikes, gets a little wide. So I'm okay with going less than 45 days. And that May 21st there, the 4 days out there looks pretty attractive. So if we go from a 110, sell the 110, buy the 105 vertical.
Mm-hmm.
You're looking at a minimum of 63. You're probably going to get about 70 cents out of that for a $5 wide spread. So you're well above your 10% that you need. A decent little rate of return there. And like I said, you got a $10 move away where you're still away before it touches your short strike. You've got that breakout potential, and you've got those levels of support plus the moving averages. So I feel that you've got a decent cushion there, and so this can easily turn into a cash flow trade as opposed to the other way that I want to go is the more directional trade, right? So when you start to break down these things, and again, there's so many different things I could have looked at. For directional, I could have went risk reversal. I could have done all these different things. But I kind of like to keep it simple, and a credit spread for this thing is pretty simple in its own right. So that's kind of the first place I looked. Now, the second place I want to go with this is I want to go to the June expiration. And I'm looking now, instead of a cash flow trade here, what I'm looking for is strictly some delta out of this thing. So what I want to do is I want to buy the 120 call option, and I want to sell the 130. And if you look at that trade, you're going to come out and it'll be cost you, that's a little much. Should be around $3.50, I think.
Which one do you want to buy, Greg?
So I want to buy the 120 and I want to sell.
So you want to buy the 120 and sell the 130?
That's correct.
There you go. 360?
Yep, $360 into the trade. So that's probably going to catch most people's pain threshold, unless you've got a smaller account. And if you look at the risk graph on this bad boy, you should have a clear 2-to-1 risk reward pretty easily.
Okay. Now we critique, I think, as we look at the risk graph. Let's take a peek here, Matty. Matt, you want to go first? You want me to go first? I got a few things to say.
You go first.
Greg, I love the chart. I brought it up yesterday. I'm interested. There's a couple things. Number one, as I look at the option chain and I think about where it is, you look at the implied volatility at the bottom. Matt, back on the chart for just 2 seconds. Matt has a very simple but very helpful indicator added at the bottom called implied volatility. And it measures it going back and forth, up and down over time. Now, we're currently on the rise at 43%. That doesn't necessarily mean it's at the peak of where it's going to be, because it has been near 50% as it goes into earnings the last 2 quarters. I do expect volatility to continue to rise over the next 6 weeks as, Best Buy has earnings mid to late May. So IV rising in general is going to have me leaning towards debit type of spread, because bull call spread is going to have a positive vega. We'll geek out here for a minute. Positive vega implications which will benefit from that. So it's like a tailwind. It's a helpful kind of condition behind that equity. So my first instinct is to lean on the debit side for a couple reasons. IV is one of them. Second is this is a delta-based play. I'm not playing it here on this red candle. I'm not playing it here, until I get confirmation on exactly where that breakout is going to happen. And there could be that a technician, literally, they could spend a few minutes looking at all those different peaks, determining where their confirmation is. Reality is, though, I'm only playing it on confirmation. So that would be that. And when I think about it
very quickly, though, confirmation is subjective on this. The range is 120 to 125, which means you can start allocating in the range on a bull call spread.
So that's a pretty good window there, 120 to 125, and there is some subjective nature to it.
Well, it's only because it's the range, and you're talking about a spread and not some type of pinpoint aggressive directional play. So if it was buying a call, I would say wait till the break of 125. It's a bull call. I think you can start dipping your toe in a little bit in that 120 to 125 range with the call sign.
With this long-term kind of bottleneck, when you think of the weekly chart as well, Greg, I actually would open your spread a little bit more myself. So 120, 130, that's a pretty good spread. 120 is going to be in the money if you're buying on confirmation. So the delta is going to be in that 55, 60 range. There's no critique about that. That's within the window of most bull call rules that you're going to see in playbooks like Attack with Trading. I personally would wait for the upward confirmation. I would play the 125, like 140. Give it like 15-point window, get a little bit lower cost, but a bigger window. That if I did catch a directional move, sounds like I'm more willing to play this a little bit more aggressive than you are, Greg, which isn't surprising. But
I actually feel you're doing it a little bit more conservative, waiting for confirmation, quite frankly, because and which means you might miss the trade, honestly. I mean, that's what it means, because you do have earnings coming up within 6 weeks here. I think the equation for me, however an option trader wants to buy this option or sell this option, I mean, that's just going to be a subjective conversation between option traders. But, and quite frankly, you're going to go look at, open interest and volume on that day you make the trade. But when you're looking at it right now, trying to decide, do I want a credit or debit? I think that's the first question you have to answer, right? Do I want a debit? Do I want a credit? Do I want to take do I want to go for the home run? Do I want to take the probability? And I think you nailed the answer when you were talking about volatility. And when we're looking at when you're looking at the combination of price, you're looking at a breakout. Trend, you're looking at a breakout. Those, from a trend perspective, you have an increasing support coming into a breakout out of a prolonged consolidation period. You should be looking directionally at this point on a chart that looks like Best Buy. You should be anticipating taking action on that breakout. 100%. For people that are going to lob a naked put here, I think you're doing yourself a disservice, quite frankly. You could have been doing that at any point, at any time on this chart, cash flowing. There are times you got to pick up the big britches, pull up the pants a little bit, tighten up that belt, and get directional. And when you have an increasing support coming into a potential breakout on a quality company like Best Buy, sometimes you just got to take the directional risk, credit traders. That's what I'll say to that. Also, when you're talking about volatility, understanding volatility is one of the most important things you can do as an option trader. I talk about shifting volatility from a technician's perspective quite a bit when we're breaking down analysis in the halftime report. And it's certainly important from a technical perspective. It increases the probability of a directional move, no doubt about that. Or it helps you identify when trends are beginning versus when trends are over. Shifting volatility is so important, but shifting volatility in the stock market is a micro conversation to what option traders talk about when it comes to volatility, since it's the second most important thing that you can understand in an option contract. I would even put understanding Vega as a higher in the priority list than understanding Theta, because Theta, there's not much to understand. If you buy a short-term option, you're going to lose money. Very simply put, Theta is a depreciating asset. It's not hard to understand. Volatility can be. Understanding why volatility moves is very important. Volatility can move for any reason, but there are some cycles in the volatility scale that we do look at as option traders. And yes, this is old hat for some veterans out there in our community. So bear with me as I discuss things that you know very, very well, but to new traders, they may not. Now, Tim, you spotted it because you're an old trader. You spot these things. You said volatility was in the mid, but you expected to go higher. And the reason is very simply why.
Earnings is in front of us, and that's the volatility.
And let's make this as simple as can be. You see that blue question mark dot right there, guys? That's an earnings. That's the anticipated earnings. Now, earnings is one of the most uncertain moments in time, and traders don't, this is what people don't understand when they come to the world of trading. We don't care if prices go down. Mark, when prices go down, do you celebrate or get upset?
I actually celebrate.
You actually celebrate. And to somebody new, that might seem weird, right?
Yeah, it's weird. I'm a perma-bull. I don't almost do.
And you're a perma-bull. Yeah. Like, you're even more of a perma-bull than me.
Yeah, no, I mean, about the only bearish trades I ever do are like buy protective put if support breaks on stuff I have.
Okay. As a perma bear, you will look to buy a put option to protect. And that's what happens here. See, people aren't going to get in and out of long-term positions. They never do that. And they don't do that for a variety of reasons. As an owner of a company, you want to be an owner of the company long-term, not short-term. But also when you get rid of an asset, it creates a taxable event. And who likes to deal with taxes? Anybody? Anybody?
Nope.
Anybody?
Bueller.
Okay, so nobody wants to deal with taxes, so we don't like having taxable events. Well, getting out of a profitable position will create a taxable event. So instead of doing that, what investors will do is they will buy put options to hedge the position to reduce the exposure. And so, for example, when you're looking at, if I owned 100 shares of Best Buy and I'm looking at this on a risk graph here. So if I just go ahead and add 100 shares of Best Buy, I'm vertical, right? I make money as it goes up, I lose money as it goes down. Well, vertical risk graphs are perfectly fine if you can have a probability scale or a probability edge on your technical analysis. You're perfectly fine, right? But we'll never do 50-50 scenarios. We'll get our edge on the chart. Right here, when you're looking at this risk graph, you got a 50-50 scenario. Price goes up, price goes down. That's 50-50 scenario. Tomorrow, we're going to wake up. It's going to be Thursday at 9:30 a.m. Eastern Standard Time. The market's going to open, and it's either going to go up, down, or it's going to go sideways, and that is absolutely the only promise any trader can give you. If you hear anything other than that, they're lying and trying to sell you something. Outside of that, traders talk in terms of probability analysis. And so everything is 50-50 until you find your edges, and your edges are defined on the chart. I feel we have an edge based on what my reading of the price action. I feel we have an edge, quite frankly, not because we're hitting resistance. We've hit resistance here, we've hit resistance there, we've hit resistance there, we hit resistance there, and all three times, boom, came right back down. I feel we have an edge because the market's showing me their hand right here. They're showing me their hand. That got stuck multiple times. See, last time it did this, we came all the way down. This time, it tried. It got stuck. It tried again. It got stuck. They capitulated. Now the bulls are rocking. I feel we have an edge on that. I don't feel we have an edge just looking at the risk graph. I feel we have an edge because of the chart. And so that's where your edge lives. And so when you're looking at this risk graph, everything is 50-50. And so in front of earnings, which, yes, traders will always assess, real traders will always assess earnings as a 50-50 proposition. You don't know what the company's going to report. You don't even know what the ranges of analysis that we're going to be talking about in 6 weeks from now of what we expect Best Buy to do, because we don't know them. The market doesn't know them. Those projections are going to start coming out, and they start coming out before the earnings. And so what happens is when an investor, a hedge fund, an institution gets slightly concerned about this 50-50 scale for whatever reason, what they try to do, they don't capitulate. They don't duck their head in the sand and say, well, inflation's going to come at me, I'm not going to worry about it. No, they're going to go do something about it. And instead of capitulation, they hedge. Consumers capitulate to fear. Traders hedge fear. And so when you're looking at the hedge, the natural hedge is to simply go out in time, and I'm not going to apply all the rules. I'm just going to show you the hedge. And so what traders will do is they will go buy a put option to adjust the left-hand side of the risk graph. And what will happen now, let's take the hedge off. Now you see the potential loss, you see the potential gain. By adding the put option, you give up some of this potential gain by locking in the risk. And as traders do that, the market knows they're doing that. The market's not going to let traders be creative for free. As it gets closer to the earnings date, the market maker will start adjusting the volatility scale higher and higher and higher to ensure that Coach Mark, if he wants to insure his Best Buy, he's going to have to pay higher premium a week before the earnings than I'm going to have to pay 6 weeks before the earnings. Because 6 weeks before the earnings, there's not a lot of fear, there's not a lot of concern, there's not a lot of volatility. It's like a hurricane 6 weeks from now hypothetically may hit the coast of Florida versus a hurricane 1 week from now hypothetically hitting the coast of Florida. I can more easily project the hurricane a week from now than I can 6 weeks from now. Can we agree with that?
Yeah.
Same thing from a risk perspective in the marketplace, which means as the market maker is not just going to allow people like myself, Greg, you, and Mark to go buy a put option 1 minute before the earnings announcement and be able to protect that asset class at 3%. That's you're going to have to pay 10% to do that. Well, today I can do it for 3 to 4%. And so as what happens as the event gets closer, this blue line will go up. And so just simply that technique alone will help you understand why Tim immediately chose the debit transaction over the theta transaction, because, and again, keeping it as simple as I can, this blue line going up hurts the theta trade, but helps the debit trade. And so there are times to theta and there are times to delta. This would be one of those times you want to take advantage of directional posture, given the fact that your analysis on volatility is going to go up and you have an edge on your chart with the increasing support coming into a very important breakout condition. That is the reason why you immediately chose the debit trade over the theta trade. Would you agree with that, Tim?
100% exactly where my head was.
I just wanted to detail that for people.
And I hope that helps. That was very, very good there, brother. I do appreciate it. I already like the segment, Greg. I already like it a lot because it lets us kind of dive into some of these characteristics. I can see a lot of me
explaining basic option strategies to people. Like, yeah, I'm sure you guys love it.
That's right. Debit versus
my
credit.
concern over the 3 people in our community that don't understand a bull call, but I want to make sure they understand before they hit the enter button. Yes. Thank you for increasing my paranoia. I appreciate that.
Mark, let me ask you, as you're listening to Matt there, do you think, this is the kind of stuff that, people need to learn when it comes to options, those type of things?
Oh, I mean, yeah. I mean, it's such a journey, right? To learn and then to become, adept and then become an expert. But man, it is worth every second you put in. It really is. I mean, I wish, that instead of playing poker, I would have started with the market. Just there's just so it's an amazing world. It's an amazing world, and it can be overwhelming a little bit at first. But stick with it, and you will get there.
Overwhelming is having a job in a pandemic that you can't go to and that you can't put food on your table to feed your kids. This is option strategies that make people money. Let's not use that word.
It's fair context. Yeah.
Yes. Trading's a great lifestyle.
Trading's easy. Don't overcomplicate it simply because you don't understand the language.
That's right. That's right. Sure. Greg, very good. I'm glad you brought Best Buy. It actually makes me feel like I shouldn't have got my head lopped off out there, Coach Emily. I know you're watching and listening. You're commenting.
Emily's laughing. Are you kidding me? She's laughing. She's saying, wait till next Tuesday.
She wants the steak and the sizzle now. Get her done. Get her done, Tim.
That's right. I'm not going to make you submit a second pick. Couple reasons. Number one, we're at the end of the show here today. And number two, you got to defend Trade Masters tonight. And you probably want your best to be able to do that. Mark,
can I also say one last thing about the option
yeah, of course.
game?
Yeah.
Okay. The last point I was going to make on Best Buy was from a pure theta perspective. And when you're looking at the 110 support level selling the 105, basically the numbers would give you a 79% probability of expiration. You have about a 70% probability of touch. You have a 16% ROI. Now, all of those are perfectly fine. All of those are perfectly fine. And people who just simply look at the raw numbers without filling out the spreadsheet at Tackle Trading would say that's a good trade. Mm-hmm. It's not a good trade because you simply do not have the ATR range for the amount of time you're selling. There's a reason you're getting 16% is because you're selling 45 days. There's a reason you're getting a 79% probability for that. It's because you're selling 45 days. But you also are not getting the minimum threshold necessary on the range, which is one of the most important things you can get. That's why the debit trade is the superior trade here.
And what you're referencing is a very important tool, by the way. It's a part of your pro membership out there. It's called Royd, and you can learn to assess.
I need
Royd.
to do some stuff on Royd.
We do.
I mean, I literally am the creator of the indicator. I literally created the math behind it. So it's a very good indicator that I've used for a decade plus now on credit spreads.
Yeah. Return on any pro member divided by delta.
Any pro member has the Theta Research spreadsheet that you can use Royd on any spreadsheet. Literally, it's the indicator I have used above all other indicators for credit spreads for 10 straight years.
Critical for credit spread trading, and that one is not going to end up panning out from a math perspective.
And I also do not put that outside the pro community ever.
Nope.
Literally ever.
Become a pro. Go find the journals in the trade center. Send an email to team at Tackle Trading if you have any trouble getting access to them. But those journals are powerful. No question.
I'll give pro members anything.
Yeah.
I'm just not giving Twitterverse anything.
That's right. Marky, promote your show tonight.
Listen,
what you got planned?
Trade Masters here in 5 hours, 7 p.m. Eastern, right here on YouTube channel. It is a show that has helped me just in my own personal trading over the last 3, 4, 5 months, however long we've been doing it now. 2 expert traders bring their picks. They break them down. They're all kinds of picks. Some of them are cash flow. Some of them are directional. Some of them are short term. Some of them are long term. And they square off, bring their best picks. At the end, I judge a winner, but mostly we're there for the picks, right? We're there that midweek. You get busy during the week and you're trading your life and all of that. And it is nice to have a handful of quality picks from 2 expert coaches. Greg will be there tonight. Marquise, who this will be his second time. And I'll tell you, Greg, Marquise, the first time he was on, he almost won. I can't
take him lightly.
I don't take anybody lightly.
Don't take him lightly.
He's my buddy. I wouldn't take him lightly.
Yep.
Or that, but it was stellar. So listen, it's going to be a coin flip tonight. And then of course we got the Traders Lounge at night for pro members following the Trade Masters at 8:30 Eastern on Tackle Trading.
Are you giving me coin flip odds on Greg?
Greg is
if the line's 110, I'm laying the line.
No, I'm gonna put it about a 145.
That's an accurate line. Greg's slight favorite.
Marquise has a puncher's chance, though. I know.
That's the 145 line. I know, that's the 145 line.
Describing what you guys are expressing. That's exactly right. That's not me saying your line's wrong. Calm down, Marquis. Calm down. I agree. I'll take Marquise for the upset
over my gambling lines.
I get it. I actually got Marquise on this one, Greg. I think he's got a good shot to bring you down, my friend.
Well, all right. Next time I see you,
Tim, hold on. Even money odds.
Dude, no, I won't give you odds off of what was just stated. You both said the 145 is the line. I'm taking the actual.
Don't act like we haven't had this conversation
he's taking money line, eh? Okay.
Yeah. I got Greg. I think Greg wins, but it's close. Marquise got talent though.
Either way, guys, if you're out there and you're a veteran of our community, you already know this Trade Master show is a lot of fun on a weekly basis. Mark your calendar, show up live, have some fun with it. Argue about the picks, yell at the judge, do everything.
100%.
Absolutely.
Specifically yell and criticize the judge.
Last week I heard Marky was
social. All I'm saying is I know for an absolute fact that the judge does respond to social pressure.
I'm weak. I get it.
Oh goodness. All right, that's our show here. Maddie, any last thoughts for the team?
No, you guys are absolutely the best. Can't wait to see Greg and Marquise on Trade Masters tonight, and hope you guys enjoyed the halftime report. And as always, guys, like, share, and help us get this message of tackle trading. And if it helps you navigate the market, you learn something on a daily basis, you get entertained, or for whatever reason you come out and hang out with us, we're just very appreciative of that. We love you guys, and hope you have an absolutely wonderful rest of your day.
We're out, Team Tackle. Subscribe, click the bell. Great job today, Greg. Great job today, Matt. Great to see you, Mark, and everybody will see you at Trade Master.